All right, good morning, everyone. Louis Porcelino. Today is May 13th, and this is the ES Morning Call. Uh, Retail sales just came out, and they missed. We're actually flat. They're expecting up 0.2%. Uh, as you can see, the reaction bonds have now. We're already trading higher now. Have spiked up to yesterday's highs, and also gold is rallied. It's up about $9 now on that on that information. It was trading up about basically $4 and rallied another $5 based on the retail sales missing their expectations. A lot of other news today. And then tomorrow you got jobless claims. So we got import export prices, Atlanta Fed business inflation expectations, business inventories. These will be big. They come out at 9 a.m. on Central EAM petroleum status 10-year note. Tomorrow jobless claims, PPI tomorrow, Bloomberg Consumer Comfort, and then um, you know we've got numbers every day this week. But jobless claims will be tomorrow. PPI will be also big too. So I think that the news and based on what's been going on, expectations has kept us in this trading range. Today, we're starting the day out. The pattern down two, up two, down two. Now we're up two, down two. So we'll see if this pattern gets broke today. If we continue on the down. We're still in this tight consolidation range with the market, making new highs at 219, and now we just recently made a low of 2057. So we're staying in the trading range for the year so far, and I think that's where our expectations until we can break out of that. We have to trade in between the ranges. 4 hour pivot, 4 hour market is. We've got the 4 hour chart here where it was oversold. It's been going from overbought to oversold on the Keltner channel. We made it up to the yellow line today, so we're trading in between into the red and the yellow. Well, the yellow is pretty neutral. Lines are flat. Lines are going flat, so I think the news is going to dominate today. And based on what I'm seeing in the profile, I bring down the profile. I think once again we talked about yesterday the two-sided trade, and and how that affected trading. I think that the profile is unfinished on both sides, 2095.75 down here, and it looks like it's unfinished up here at 2105. So we got a 2105 high, 2197 or 2195 low. Yesterday's action looks like we still have to fill in down here, and also that this is unfinished, and we keep trading in this range, and we talked about it yesterday. The importance of the market to take out Globex highs or lows to see if it will continue to go. Yesterday, we had two big pushes down. We double bottomed at 92, and before we took off and rallied up to the end on the range, and then we never took out the Globex high. So those are important things. Today, we're looking at we got an upper trading range between 2107 to 2109, illustrated there. We got a bull bear zone of 21 even. Okay, and then we have the top of value sitting at 2097 quarter. 2095 quarter yesterday was the point of control, and then we've got the bottom of value at 2085 half. As you can see, once again, we established the middle. I put it out there, and we rallied from the middle. Never took out yesterday's Globex high, so from the inside day based on Globex highs and lows yesterday. So stay tuned on that. I think that there's a lot of news coming out. I'd probably stay out of the market till 9 o'clock Central until we get some more direction from the news. We're trading currently up about 400. As I said, retail sales came out. We missed it this morning. Bonds are trading higher. Bonds have been not only bad news is going to help the bonds to rally. Uh, the 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 30 years gone from like a 179 to a 22 in the last 3 weeks, and this is where we're sitting at right now. And I think there's some shorts sitting in that market. They may starting to trample each other to get out because any more bad news will, if Fed holds through to what they're saying, and that is that we are going to, they're going to raise rates when economic recovery tells us that we can, and when you get dismal numbers like the retail sale, they're just kind of stuck. They can't raise these rates. Gold's up now 12 bucks, up above 1200 again. We've been trading in that range too. I mean, gold's in a range between 1220 and 1165, I guess. And now we're back above 1200. So yeah, the S&Ps, and so you got to keep an eye on. Gold keeps rallying. That is negative, meaning that people are afraid of what's going on in the economy. Oil once again trading above value, and I think oil is, like I've said, for the last 3 or 4 months, oil will eventually divest itself from the market and be its own entity, and I think that's what's happening right now. 61, we're up to 61.45. Remember, we made a high last week of 62.5. We're trading above value. 60.86 is top of value. We're going to use for today oil. We're going to be using 61.57 right in here as the bull bear zone. Point of control 60.54, 59.90, 59.90. So just to reiterate, I think that we're going to have a two-sided trade. I'd stay on the sidelines till 9 o'clock because of the numbers, and looking for the market. Come up here. This high is not complete. We failed. This is important. 2 days ago when we failed to take out this high. Okay, and these are the things that's happening in these markets. We got a poor high back here at 21.15. I definitely think these are targets, but I think what happens is the markets get to extremes like lows when it got down to here, and there's no, the sellers gave up, and that's why we get these things where the bottoms look unfinished and haven't been completed. So when we're in this range, we really got to be looking for the extremes on both ends and looking for the market to move the other way because there is a lack of acceleration and we're in a trading range. All right, everybody, good luck. Follow us on Twitter. See me on Top Step Trader at 8. Good luck and talk to you soon.